Yo, America! Let's talk about something as fun as a root canal taxes. We've all heard the saying, nothing is certain but death and taxes. Cheery, right? Look, we work hard for our money. The government knows that. And their way of getting a piece of the pie, you guessed it, taxes. But here's the thing. The US tax system doesn't work like taking a flat percentage from everyone. Nope, it's way more complicated than that. That's where tax brackets come in, my friends. Buckle up, it's about to get real. Think of tax brackets like levels in a video game. As you level up, earn more, the challenges, taxes, get progressively tougher. But here's the catch. You only pay the higher tax rate on the income within that specific bracket. Let's break it down. Say you hit a higher tax bracket. You might think, boom, gotta hand over a huge chunk of my hard-earned cash. But hold your horses, TurboTax Timmy. You're not taxed at that higher rate on all your income. Just the portion that falls within that bracket's range. All right, folks, enough with the metaphors. Let's get down to the nitty-gritty details. Let's dive into the actual numbers for 2025. This is where the rubber meets the road. Remember, these are subject to change because, well, government. Policies can shift, and new laws can be enacted. For our single filers out there, let's break it down step by step. 10% bracket, up to $10,000. Welcome to the club. This is the entry-level bracket. You're just dipping your toes into the tax pool. It's a gentle start, but it gets steeper. 12% bracket, $10,001 to $45,000. Still cruising. You're moving up, but it's manageable. Enjoy that extra avocado toast. You deserve it for making it this far. 22% bracket, $45,001 to $90,000. Feeling the pinch a bit? This is where you start to notice the impact. Time to start tracking those receipts. Every deduction counts. 24% bracket, $90,001 to $190,000. Okay, things are getting real. This is where financial planning becomes crucial. Maybe skip that third vacation this year. It's time to prioritize. 32% bracket, $190,001 to $578,125. Welcome to the big leagues. You're now a significant contributor. You've officially made it to a higher tax bracket. Celebrate wisely. 35% bracket, $578,126 to $693,750. Taxes got you feeling stressed. It's understandable. Treat yourself to a massage. Sometimes you need to unwind. You can afford it, right? It's all about balance. 37% bracket, over $693,750. Congrats, you're in the top tax bracket. This is the pinnacle. Don't forget about us little people down here. Your contributions make a big difference. Now for my married couples filing jointly, let's see how your brackets stack up. 10% bracket, up to $20,000. A modest start, but it sets the foundation. 12% bracket, $20,001 to $90,000. You're moving up together. 22% bracket, $90,001 to $180,000. This is where teamwork in managing finances becomes key. 24% bracket, $180,001 to $380,000. Planning and budgeting are essential here. 32% bracket, $380,001 to $1,156,250. You're in a higher league now. 35% bracket, $1,156,251 to $1,387,500. The stakes are higher, but so are the rewards. 37% bracket, over $1,387,500. You've reached the top together. Remember, these are just the federal income tax brackets. There's more to consider. State and local taxes are a whole other beast. Make sure to account for those as well. Let's put a face to these numbers, shall we? It's easy to get lost in the sea of figures and percentages. But behind every number, there's a story. Meet Sarah, a freelance graphic designer living the dream and paying the taxes in Austin, Texas. She's the creative force behind some of the coolest designs you've seen online. In 2025, Sarah hustled hard and brought in $60,000. That's no small feat for a freelancer, especially in a competitive market. Now she's not handing over $13,200, 22% of $60,000, to Uncle Sam. Instead, she's navigating the complex world of tax brackets. Here's the breakdown. The first $10,000, taxed at 10%, which comes out to $1,000. It's the simplest part of the equation. The next $35,000, from $10,001 to $45,000, taxed at 12%, totaling $4,200. This is where things start to add up. That leaves $15,000 of Sarah's income falling into the 22% bracket, which comes to $3,300. It's the highest rate she has to pay. Add it all up, and Sarah's federal income tax bill is $8,500. It's a significant amount, but it's part of the freelance life. Not exactly chump change, but hey, at least she can afford those avocado toasts, right? Balancing creativity and finances is all part of her journey. Section 5. The Married Life Tax Tango, Filing Jointly versus Separately. Now, let's introduce David, a software engineer, into the mix. David spends his days coding and solving complex problems, but now he faces a different kind of challenge. He and Sarah decide to tie the knot. Mazel tov. Their wedding is a beautiful celebration of love and commitment. But before they say I do, they've got a big decision to make. File their taxes jointly or separately. This choice can have significant financial implications. Filing jointly often makes sense for couples with a significant income disparity. It can lead to lower tax rates and higher deductions. But sometimes, filing separately can work in their favor, especially if they have unique financial situations. This is particularly true if one spouse has high medical expenses or significant student loan interest. These can be better managed when filing separately. It's a complex dance, my friends. Navigating the tax code can feel like a maze, but with the right steps, you can find your way. Remember, this is just a taste of the tax tango. Each couple's situation is unique and requires careful consideration. Consult a tax professional to figure out the best strategy for your unique situation. They can provide personalized advice to help you make the best decision. Section 6. From Side Hustle to Empire, Taxes on Different Income Streams. Let's say Sarah launches an online course sharing her killer graphic design skills. Boom! She's officially a multi-income earner. But wait, the plot thickens. The taxman treats different income streams differently. Her freelance income falls under self-employment taxes, meaning she's responsible for both the employee and employer portions of Social Security and Medicare taxes. But hey, at least she can deduct business expenses like that fancy new laptop. The takeaway: multiple income streams mean a more complex tax situation. Time to level up your tax knowledge, Sarah. Section 7. Tax credits versus deductions. Unmasking the tax code superheroes. Now, let's talk about everyone's favorite topic: saving money on taxes. Enter the dynamic duo tax credits and deductions. Deductions are like sidekicks. They reduce your taxable income, which in turn lowers your tax bill. Credits, however, are the true heroes, directly reducing the amount of tax you owe, dollar for dollar. From education credits to childcare credits, there are tons of opportunities to shrink your tax bill. So, do your research, people. Section 8. Planning your financial future, the power of early tax optimization. Here's the thing about taxes. They're not just a once-a-year headache. They're a constant factor in your financial journey. Thinking about opening a Roth IRA, maxing out your 401k contributions. These decisions can have a ripple effect on your taxes for years to come. The earlier you start planning for taxes, the better positioned you'll be to achieve your financial goals. Section 9. The final word, but not the final tax bill. Look, I'm not gonna lie. Taxes are complicated, they're confusing. They're about as much fun as a jury duty summons. But understanding the basics, especially those pesky tax brackets, is crucial for making informed financial decisions. So do your research, talk to a tax professional, and remember, the more you know about the tax code, the better equipped you'll be to navigate its twists and turns. And hey, at least we can laugh about it, right?